The AI revolution, it's being completely misunderstood. We're not just watching some magical software miracle floating in the cloud. No, what we are actually witnessing right now is the largest physical infrastructure mega project in modern history, and it is being violently bolted to the ground. To really wrap your head around the sheer scale of this, you've got to grasp this one staggering number: $400 billion. That's the amount of capital expenditure, real money, poured directly into U.S. data centers, semiconductors, and power infrastructure by tech firms in just the last year alone. Think about that.
But here's the data point that's literally giving investors whiplash right now. We've got $400 billion in infrastructure spend, sitting right next to a relatively paltry $50 billion in actual AI revenue to date. It's an enormous gap, right? And it creates instant cognitive dissonance in the market. Everyone is suddenly asking the exact same question.
Section 1. The AI bubble myth.
Okay, let's dive right into this. Are we just living in dot-com bubble 2.0? Honestly, it's a completely fair question when you look at that kind of massive upfront spending against minimal revenue. But the data tells a radically different story. To dismantle this bubble argument, let's compare the absolute market darlings of their eras. Back in the dot-com boom, Cisco was operating in a world of abundant capacity and collapsing prices, treating at an astronomical 140 times forward earnings at its peak. Today, NVIDIA is operating in a world of severely constrained supply, treating at roughly 25 to 30 times forward earnings. Treating these two cycles like they're the exact same thing completely misses the physical reality of what's happening right now.
So, what are we actually looking at? It's something known as the productivity J-curve. If you look back through history, whether it's the railway boom, early electrical grids, or the rollout of the internet, massive capital expenditure always comes first. You have to build the roads before you can drive on them, right? This massive early infrastructure investment precedes visible economy-wide profits by years. Companies literally just need time to reorganize themselves around the new tech. Now, as we transition into the actionable market data and the specific projections behind this massive build-out, I do need to drop in a quick standard investment disclaimer here. The charts we're exploring today are for illustrative purposes, and of course, past performance is absolutely no guarantee of future results. Okay, so the future of this market is going to be dictated by hard physical constraints, which leads us right into our next point. Section 2. The physical silicon backbone. We have to completely pivot our thinking away from all these speculative software theories and focus 100% on the physical backbone of this operation. There's a quote from a Morgan Stanley analysis that hits the nail on the head here. It says, "Software alone does not move the frontier. Physical bottlenecks matter. The progress of AI is strictly physically constrained by hardware. Meaningful leaps in what AI can do depend entirely on plugging in new generations of chips, high bandwidth memory, advanced servers, and, most importantly, electricity." And the demand for that hardware? It is absolutely explosive. Tracking actually shows that global weekly token usage surged from 64 trillion to 227 trillion between January and March of this year. Guys, that's a 250% increase in just 3 months, driven heavily by super complex tasks like software programming. The demand is so intense that major providers have literally had to cap user access. There just isn't enough compute to go around. And this brilliantly illustrates the crazy feedback loop we're entering. As chip generations transition, say moving from Blackwell to the upcoming Rubin GPUs, the average price per token is expected to drop by over 70%. Now, logic might tell you that lower costs mean lower overall spending, but actually, scratch that. The exact opposite is true here. This massive cost reduction will paradoxically trigger a self-reinforcing loop. It makes AI cheaper to use, which stimulates an even higher baseline of compute demand. We're talking forecasts that are triple what they were previously expecting. Section 3. The 18 gigawatt power deficit. So, all of this skyrocketing compute demand is about to crash headfirst into a terrifying core conflict: the impending vulnerability of the localized U.S. electrical grid. Power is the ultimate choke point right now. These data centers, they aren't just big rooms with servers anymore. They've evolved into massive city-sized operations. We're talking 1 to 4 gigawatts per single site. But here's the kicker. They literally can't plug in. They're facing severe delays because of permitting battles, political pushback, and sheer grid interconnection limits. Finding power is rapidly turning into a highly contested structural roadblock. And the math on this is sobering to say the least. By 2028, the U.S. is looking at a massive power capacity deficit of 18 gigawatts. To put that into perspective, that's a 12 to 25% shortfall of the actual power needed just to keep this AI infrastructure growing. Now, if you're finding this deep dive into the hidden physical constraints of the AI boom valuable, take a quick second to hit that subscribe button right now. It ensures you never miss our data-driven explainers that actually look past the headlines.
Section 4. Securing off-grid energy. Because the traditional grid is basically paralyzed, the tech giants are absolutely not just sitting around waiting. They are urgently deploying bring-your-own-power strategies to completely bypass traditional utilities. Let's look at exactly how they plan to solve this massive gap. We're seeing massive deployments of natural gas turbines, which are expected to bring 15 to 20 gigawatts, and bloom energy fuel cells, adding another 5 to 8. But the real structural shift is lower down on this list. They're securing 5 to 15 gigawatts through direct nuclear output, and they're rapidly converting existing Bitcoin mining sites into AI data centers to lock in an immediate 10 to 15 gigawatts. It's wild.
You've got hyperscalers like Google and Meta essentially paying 300% premiums just to guarantee their power access. That's how desperate the situation is. They are systematically taking control of their own energy infrastructure, and that even includes making direct investments in advanced tech like sodium-cooled nuclear fast reactors. They are literally reshaping the entire power sector just to ensure their AI models keep running.
Section 5. The real AI winners.
So where does all this leave us? We know the demand is very real, we know the bottleneck is power, and we know the solution is off-grid infrastructure. That brings us directly to the actual hidden winners of this economic shift. And the crucial point is this: the biggest winners aren't necessarily the ones writing the code. The real winners are the emerging market infrastructure builders. Investors used to view these companies as purely cyclical trades, but this is a permanent structural shift. Without these companies providing the physical silicon, the memory, the metal, the entire AI revolution grinds to a halt. The winners are also the energy supply chain and grid equipment suppliers. I mean, their costs have already shot up 30% since 2019 just due to demand. And finally, the non-tech AI adopters. For those non-tech companies that are actually implementing AI, the immediate return on investment isn't actually top-line revenue growth. The primary financial payoff here is ruthless labor optimization and aggressively compressing their cost structures. Small teams can suddenly rival the output of massive organizations. This is creating some really significant deflationary effects on operational costs, and it's fundamentally redesigning the modern corporate workforce as we know it. Ultimately, this is the paradigm shift you need to walk away with today. AI is not some software bubble floating out in the ether. It is a highly capital-intensive physical infrastructure mega project, and it is strictly constrained by the availability of electricity and physical supply chains. Bottom line, the companies that solve the power problem will control the compute frontier. If this explainer changed how you view the AI landscape, you absolutely have to watch our dedicated deep dive on the global energy infrastructure crisis next. Click the explainer on your screen right now to binge watch exactly how the battle for the power grid is unfolding globally, and I will see you over there.